my name is James Nicholson and welcome to my YouTube channel. In this video, I want to talk about an article in MSN, Microsoft, the news network that they have there, where they're talking about, with lots of different financial analysts putting their opinion on why interest rates are unlikely to go up, while your mortgage rate, more importantly, is unlikely to go higher at the moment, and why they think that we probably peaked on mortgage rates. Now, that's interesting to know, and I want to talk about why that's happening, where they see interest rates going with the Bank of England. But not only that, because the Bank of England rate is great, but what you really care about is what's your mortgage interest rate going to be. So I'm going to talk about that as well in this video. So as always, if you haven't done, make sure you subscribe to the channel over there and hit the bell notification. We're on the way to 25,000 subscribers now. That really, really helps us if you could do that. And while you're here, smash the like button or tickle the like button. Do something to the like button. Don't be upset about that. It really helps. Every time you hit that like button, it helps get more views on the channel. And our goal this year collectively is 5 million views. We're halfway there now. So make sure you do help us with that. So what is going on? Well, there's a guy, he's called Roger Gewolb. I'll put him here. He's called Dr. Roger G. Wolb, probably pronouncing that wrong, and some other analysts did a roundup article on MSN talking about interest rates and talking about inflation as well. And so consumer-led inflation, which they were talking about, just fixes itself. That's what they're saying. They're saying inflation, if you just leave it, it will correct itself. And I agree with that, because the government, Rishi Sunak, Michael Gove and all these other guys are taking credit for dropping inflation. And we've had conversations, a lot of them over the last year with you guys, about what actually did the government do? What policies did they introduce? What did the government do to actually bring down inflation? Maybe you can comment below if I missed something. I didn't see any policies that I felt basically the government implemented that reduced inflation. Now, I'll give them the credit where it's due. When they had COVID, they did have stuff that helped. We had the bounce back loans, we had the furlough scheme and stuff like that. But inflation, I didn't see any policies that I felt directly brought down inflation. It's just something that happened over time. They took the credit, that's up to them. But what is interesting is that these analysts are saying that by raising the interest rates 14 times, it was not really necessary. The inflation would have come down as it did. But here's the consequences that we've got at the moment. There are 500,000 businesses, 500,000 businesses that are on the verge of insolvency. They're just about to go bust because of higher interest rates. Maybe they can't borrow money. Maybe they're servicing debt that they already have, and that's got more expensive. Maybe they have invoice financing or factoring. These sorts of things make a big, big difference. And 500,000 businesses is a hell of a lot. That will hit the economy very hard. And that's what these analysts are saying, is that right now we're in a recession, technically, albeit we're probably going to come out of this little mild recession quite quickly. But we've got a ticking time bomb over here. We've got businesses that are suffering, businesses that have been hit really hard by the pandemic, and now they're getting hit hard by inflation. Cost of goods is getting more expensive for them, but also they're getting hit by the fact that the cost of borrowing that they might need to cash flow the business and make things right is also really, really tough for them as well. Another thing that we're seeing as well is mortgage arrears are up 50%. Mortgage arrears are up 50% at the moment. Now, they currently sit at around 1% mortgage arrears, which is not particularly high compared to 2008. In 2008, it was 3.5%, 4%, the mortgage arrears that actually happened at that stage. But mortgage arrears are a real concern for a lot of people. The fact that the number's going up, it's going up fairly quickly, is starting to hit people. So what these guys are saying is that look, interest rates from the Bank of England, they're not going to go up again. Like pretty much whatever happens with inflation, they don't feel that they will go up. But what they also are saying, which is what I've actually been saying for the last few months as well, is that when the Bank of England cuts interest rates, the mortgage companies are unlikely to pass big cuts on to you. They've already done their cuts. So what we're saying is mortgage companies, mortgage rates that you can get, that's what you really care about. You don't care how high the Bank of England rate is. You care about how much your mortgage rate is. They are already below the Bank of England rate. And so when the cuts do come from the Bank of England, they're less likely to pass much more on to you because they just don't have that. It's not predicted that the swap rates would massively drop in that scenario. And so you probably, if you're holding out for a better rate, which I know some of the viewers on this channel are, some of you are waiting for a really good rate to come and expecting rates to get to 2.5% or 3%. It's not likely that that's going to happen. I have said myself, I think that the best rate that you would possibly get this year, if everything went well, would be 3.5%. That would be with fees on top of that as well. Right now, you can get rates at 3.99%, which is not bad, but they have a 3% fee on top of that. So you've got to take that into account as well. So 3.5 as a rate is where I think that you will get. And I agree with these guys. I think it's a good analysis. I think that we have hit businesses so hard. It's been a prolonged 4-year period now. Your business has been shut down. You've got a bounce back loan, so you've got huge extra monthly payments that you've got to catch up on. Your energy costs are gone through the roof. There's a chip shop over the road. His energy bill is $4,000 a month. $4,000. It was £1,000 previously, and at the peak it was at £4,000. I mean, how does he operate with that kind of thing? That's literally all his profits wiped out. It's insane what people are going through at the moment. And so I think they're right. We do need to bring the interest rates down, but I also do think that you're not going to see much benefit as a business owner or a mortgage owner. I think that the rates are pretty much coming down to where they're going to settle for the next few years. Even as the Bank of England brings that interest rate down to 3.5%, which is where a lot of people feel it'll end up, I don't think you're going to start seeing much below that as a rate that you can borrow at. What do you think about this? Do you agree? Do you think the Bank of England rate has peaked? I think that is true. Do you think that the banks, as the Bank of England drops the interest rate, do you think that's going to get passed on to you, or do you think they've already done that part? Do you think that's what's going to happen? Do comment below. Do smash the like button. Do go and check out some more content on my channel. Maybe go and watch this video right here.